fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. Well, it looks like we are breaking down once again beneath this 382 level of the pitch fan mean reversion path to the upside. Are we going to take out the last little bit of 60 billion external liquidity in this external liquidity range, which we've had open on the charts for near over a month now, since April 25th. So this bearish trend-based fib extension level of the 1382, are we going to come clear it out? Let's go look into the heat map of High Block Capital to see what liquidity has been brought into the charts. What happens here is when people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those liquidation points lie. So let's not waste a second more and go in and see on this immediate drop down to the downside. In this 1 minute, 2, 3, 4, 5 minutes ago, we had this drop to the downside, which pinged all of these pools of shorts into the charts. We got 100, 200, 300, 400, 500, 600, 700. There's a lot of millions of dollars here pinged in to the charts here. If we zoom in to see what the imbalance is, obviously it's an imbalance to the they immediately recovered to take that back, those 100x. So those 100x that opened into this red candle got gobbled up immediately, and you see these longs that are trying to open up here as well. You got 56 million, 41 million, 82 million, 75 million, and you can see based off of the imbalance here that there's 100 million to the 75 million. That's a 30 million imbalance, which causes this to be a stop loss hunt before the rise. It's a 2-for-1. This is what I used to call the dolphin dip back in the day. This is the liquidity grab, the stop loss hunt, whatever you want to call it. They come down, they stop out all of these 100x players, while at the same time inducing shorts to enter, which then they trap the shorts and then come back out. This could be your double bottom idea. Let's go into the higher time frame so we can see how the higher time frame paints a narrative. We have done it already today, the Asian session, so we'll go mighty quick through this. We always skip the 12-hour. By the way, please consider subscribing if you have not hit that like button already. This is a paid service that we share with you for free because we're like that. So basically you have this imbalance to the upside on the 7-day time frame after previously taking out the lows here on the 7-day time frame. As we expand our vision to the higher time frame, we start to see that there is still some more liquidity down below on the monthly time frame, down at 24.5 and below. In terms of imbalance, though, you might have taken out the imbalance with this on the monthly time frame because there's more stacked liquidity up above, all the way up to the 30k region. If there is a narrative, you could have an inverse Bart Simpson that does take you back up out of here as if nothing happened. It has happened before, and it does happen again at some point in the future. We watched it happen with the Silicon Valley Bank failure. There was some FUD and they just surged right up without thinking twice. So it could happen just again once they spawn the divergence off the liquidity here on the 3-month time frame. We did see 100 billion reclaimed here on this 3-month time frame. We have yet to see the $60 billion recovered here on the 25-2 region. We were kind of expecting them to come back into this region, which is why we have this little bit waiting for them to reclaim, although they're getting this buyback wick back above the 382 here as they trap those shorts. Let's go update this and see how the recovery is happening. Got to be fast. All right, so they're back up above here. Looks like they just wanted to ping some shorts to see what the interest was, and they came back with a V-shaped recovery to come get that 121 million 100x short, saying
fatality.
And they gobbled him up without thinking twice. This is why you don't be a breakout trader, and you don't want to short necessarily bottoms. That's the FUD is a catalyst for a release that was coming weeks in advance. It wasn't something surprising us to come down to this region. We were wondering why they took so long, to be honest. Maybe they needed the news catalyst to break this fortitude that had been built up here. I don't know. We were talking about toying with the idea of this possibly being market maker positions. Maybe this is a little bit of Binance's stash that they're trying to take back. Who knows? So anyway, if we go back into the here, we still could see that 60 billion reclaimed here at 25.2. You do have 40 billion also at 25, and if we go to the 6-month time frame, you do have a nice path paved for you all the way down to 22.5. Are we going down that region? If we start to close daily candles down in these lower lows, you start to see the narrative to the lower high, lower low, lower high, lower low, down to these paths. Although we did do that here, we had lower low, lower high, lower low, lower low, and then we surged back up to create a higher high. So you got to go low to get higher. The bull has to lower its horns before it attacks. This is where they're tapping into these liquidity pools. Where does the end stop is the question. 22.5, you got 85 billion on the 6-month time frame, 60 billion at 24.9, 78 billion at 78 billion, 81 billion at 24.6. and so on and so forth. 100 billion down to 24.3. Got double digits all the way down to your 100 billion at 22.5. So the entire region is caked up. To wick down to those regions takes an awfully lot of time. It would have to be a narrative that takes a couple days at least, or similar to this pattern where you have different paths as you break down. So this looks like we've consolidated to this region down here. How do we handle it? If you go to the yearly time frame, we did talk about that being kind of ambiguous in terms of once they spawn some divergence into one of these pools down here, it could be enough to warrant a surge to the upside at that time, in similar fashion here when they bounced off the 618 of that region. Let's go into the Binance chart and start to take a look at some fibs and ideas that we had. We could start to erase. We'll first go back to where we were during the Asian session, and we talked about going sideways, but what we wanted to see on the oscillators. So what are our oscillators? Well, let's turn them on and tell you. Heads up display here. So the link is in the description, momentummaster.info for more. Scroll down to features, toggle at your leisure, turn on all the components if you like, see what it looks like, see each individual component, read about it in its glory. So what we're seeing right here. All right, so we talked about the 15-minute time frame starting to curve on the cloud and thinning here. Now you'd have to reclaim it. We can't see the future exactly, so we did see this cross down event occurring. We said you could possibly come down for that double bottom event. The double bottom event just occurred, but we are seeing that if you do kiss off the cloud, then you can bounce off of it. This cloud was not thick enough to warrant a justified upside event. We basically expected you to go sideways. We didn't catch that bounce off the double bottom here on the London time frame, so basically this is null and void, but we did call that at some stage you are going to come up to these pools on the pools that opened up here. So you have a large amount of shorts. Come on now. You have a large amount of shorts that are opened here. There's so many hundreds of millions of dollars here that it's hard to keep track of which one they're actually aiming at. So as they start to stack up these here at the interim right now, you have the 202 million at 25.93. If I zoom into this in more detail, we can get more precise. 25.98, you got a 50x pool of 226 million. We previously laid out some of the 100x. They like to come back for 100x. So 26.134, you have a 100x pool of 163 million. They like to come back for the 100x without hesitation. So you're starting to stack some pools up here in this region. Let's go look at what those pools are up here. Looks like you got 226 million up at 26.495. I think that was where we had 374 up here, but 495 will put you right at the 500 mark. So we could come up into these pools. We were looking at some 100x pools before, which is why we put these here. So realistically speaking, it looks like you just pinged the liquidity and you just snagged some shorts and longs. And let's go take a step back and look at the higher time frame and make our descent into a narrative here on BTC. Okay, so earlier today we had a candle close exactly on the weighted moving average on the daily time frame. This is the 200 weighted moving averages. I like using weighted over simple because they stick closer to price and are more accurate for those key levels of where to take profits on if you were in a short from this idea we had at the 236, and if you were smart enough to hold it, congrats to you. Or even if you entered on one of these level failures at the 786 down to here, congrats to you. So if we're going to take a look at the daily time frame, we are seeing the momentum open up here on the daily time frame to the downside. We had the cross down event 2 days ago at this wick down failure, the cross down of the MACD, the leading MACD. This is a leading MACD formula which has you at hello and can alert you on the Momentum Master suite using the Momentum Master B. If you want to go to a time frame of your choosing, choose pump or dump, it will let you know about each one of those crosses and you can leave it perpetually open. So if you want to know daily cross down or cross up, those might be significant to you if you are in a long or short trade. So this is the leading MACD formula right here. You can also fill it in. I might consider doing that actually, but I just didn't do that because I didn't want to confuse viewers. But one cool thing here is you can kind of fill it in to see the MACD crosses in a more oscillator type form. All right, so we'll leave that filled in for now. So anyway, it looks like the daily time frame has the cross down event confirmed on the baselines. What does the baseline mean? It means that it's your first sign of reversal. So we could be seeing a continued downside play on the daily time frame with the suppression possibly opening up here on the daily time frame. If we look at start to shift our narrative down to the 22, the unsyncopated rhythm of the broken 22-hour time frame, you are at the bottom of the Keltner channels here. What are the Keltner channels? Well, they are ATR-based Bollinger Band type ideas, which when you start to come outside of them, it likes to self-correct and come back into them, and conversely to the upside, it likes to come back down into these. So we are currently outside the Keltner channels. It doesn't like to stay outside in the unknown. It likes to come back into the known. So it might be doing that at some time in the future, or at least going sideways while it brings the Keltner channel down to it. In similar fashion, if you have like an ascending, if you're going bullish, you have these ascending channels where you go up with the Keltner channel as well. So it's giving time for the Keltner channel to come down to it for familiarity of sorts. If you look at the, if you go to the 22-hour time frame, you are getting oversold on the Williams, and it's starting to stack up in confluence on multiple indicators here. The 22-hour could see a bounce of some nature in the coming daily close of these 2 hours. So the first candle might be bearish, and then the last 2 hours into the next daily might be bullish. It is Tuesday though, so what is the play for Tuesday, Wednesday? False move Monday was the drop to the downside. Tuesday, Wednesday is what exactly? We are currently going sideways for all of Tuesday. Will Tuesday be a continuation, complement of Monday, or a counter narrative to Monday? Will you see a Tuesday, Wednesday rise, and then a Thursday reversal continuation to the downside? I have no idea. But if we go to the 12-hour time frame, you're also getting in that sweet spot with the 12-hour that we like to see, where you start to get into this zone where it's turning green. Ideally, you'd like to see a double bottom with the Williams cross here. Those double bottoms looks like a basin, a river basin on a mountain kind of. You got this water flowing and then the sun rising over the horizon. This is why I made these kind of like mountains with like the rising sun. It's like the light coming over the horizon before it goes up. So this is why I call it the rising sun. So you're not going to see the rising sun immediately. It's going to take some time to play out, ideally speaking, on a real play to the upside on the 12-hour time frame. Similar to here, you did have that already percolating here where you had the green, and then you came down further, and then you had the double bottom idea with the rising sun, and then we came out of there. So are we going to see something in similar fashion where we kind of round out and fake out and then cross down and then go down further, and then that's where we get our bottom kind of idea? We did put another idea for a 618 bounce, which would be from this impulse to this impulse here, and then that would give you somewhere down in 23.9 region. So if we were to kind of meander around for a little bit and then kind of go up and then go down to that's one possibility on that Hail Mary play between the 1618 and the 2 level of this bearish trend-based fib extension level. You are getting a little bit more momentum that could come down and round out here on these river basins of the Williams on the 12-hour time frame. If we start to shift ourselves to the 6 is getting into that nice sweet spot at the bottom here. You still have some idea for a curvature double bottom, kind of fake out, break down an ABC down to the downside for that double bottom with the rising sun out of the double bottom. Ideally, like anything, you got to see the double bottom. We went over this earlier, the Wendy's versus McDonald's idea. So even seeing this possible double bottom here. Was this the fake out to the breakdown, and then you're going to see the surge up on the 6 hour? The 6 hour time frame does look like it's poised to play out. I definitely personally don't like to short 6 hour 12 22 lineups. The 6 12 22 lineups do bang hard when they bang to the upside. I remember somebody trying to short this, and I was telling them, you know, when you had the 6 and the 12 and the 22 against you like it was here, so you had the 6 and the 12 and the 22 ready to go, and they banged to the upside. Was that this one? I think it was. Yes, it was. And yeah, so that 22 hour time frame could be a doozy if it takes us to the upside here. So if you're in a short, it would be wise to consider paying or taking profits on the short. Always pay as you go. That's my methodology anyway. So you're getting low on the 4 hour as well. You're getting the MACD, leading MACD, to come kiss the Williams and say, what's up here? Are you starting to create a rounded out narrative into a rising sun event? It's in that potential on both the RSI and the money flow. They're all in the green and oversold to a nice level here alongside the stochastic RSI and all of these fun things. We just had a 4 hour candle close, which then triggered some algos to sell off some more. And yeah, if we go to the hourly time frame here, we still have about 30 minutes for the hourly candle to close. The hourly candle did take you nowhere. When you see things like this where you go sideways and the stochastic RSI gets overbought and you didn't do anything, that's where you start to see a continued dump on the hourly time frame. So this is the opposite. The opposite is true. If you go sideways and it resets the stochastic, that's bullish. This is the opposite of that, which is bearish. And so you could see more downside ensue. So the Williams did get a rising sun event, but after the dump like that, it's been lackluster at best. So it's going to be one of those likely double, triple fake rising sun ideas, because it is an hourly time frame. The more weight is carried to the higher time frame. And now if we turn to our oscillator over price action, you have this very thick cloud to contend with. So even if you were to pierce through it, then it's just like a battering ram that gets broken at the gate. You have to go back and recoup, and you'd likely come back to recoup that. And yeah, you'd wait for this to kind of curve and be in a thinning nature. And when it's thin, that's when you're more likely to pierce through. So even here with this thickness, you got rejected, and then it took a second attempt to break through, kiss, and continue. So same thing here. If you were to hit it, you would hit it, come back down, regroup, and then pierce it with the second time. And that's what you create with your kind of W formations out of there. So if you're actually trying to break through at some stage, you'd have to pierce it at one point and get rejected. Are we breaking down at this point in time here? Let's take a look at the liquidity as it's entering once again. Hasn't changed at all. It looks like they're coming back for the 100x. They're saying no to the 100xers. They always come back for these guys without hesitation. It's like if you're 100x, you got to pay yourself quick, because they come back for these guys without hesitation. And it's all relative, right? So the 100x guys that are up here that are still open, they could possibly come back to those without hesitation. They're just waiting to stack them up, and that could be their wick to stop them off here. So the noodles that are nearest by are the 100x longs that are down here, so they're coming back to grab these guys, and they bounce off their liquidity. 83 million gone.
Fatality.
And just like that, they don't care which side you're on, they will come gobble you up without hesitation, without remorse. And we are currently, let's see one more time, we are 15 billion imbalanced in short liquidity here at 25.5. We're seeing this PVSRA strategy of some heavy volume stepping up to the plate on the hourly time frame. 200% of the previous 10 candles of longs of volume rather, so that's 200% of the previous 10 hours here on the hourly time frame in one candle here. So it looks like they're trying to break the range and head into the lower idea. This is where you'd want to look for some divergence plays to start spawning. You can start to see it on 15-minute time frames perhaps. Does anyone know if there's any news that dropped to cause this play to occur? This does seem kind of news oriented. Let's go see real quick to the NAS to see if anything happened on that 15-minute. There was kind of like a drop with some volume and here too. So perhaps there was a news play that dropped, because it seems like the last 20-30 minutes ago there was something on other things too. Let's go see what the DXY getting kind of bullish here, getting a surge. So there must have been some news that was bullish for the dollar. Interesting. All right, so yeah, what do I see going on here? Well, if you break these lows, it looks like we tapped the low for the second time. New York is now starting to open. We got about an hour for the actual handoff from London to close. Ideally, you'd be seeing this hourly reset here. How does the hourly dump? How does this dump on the hourly time frame treat you? With a thick cloud such as this, is this the immediate continuation to dump to the downside and attack the external liquidity once again on the 3-month time frame? Are we going back to the 25.2 region right away without hesitation here for that $61 billion without a second thought, and leaving all of these minutia of the 1-minute characters on the table for now? There's nothing we can see on this 1 minute beneath us, so it all has to occur in these external liquidity pools. In terms of a continuation, like I said, this is a bearish flag. This is a channel, if you will. You go like this. You can have it in a channel, and then you have this measured move continuation if it is bearish, where it would take you down to this region. You could potentially come down into that 618 at the 23 region if it is bearish and breaks down out of this region. Just cutting off everything but looking at the external liquidity range only. You could come down into this pool. 24,800 would have you at that 51 billion down there on the 3-month time frame. It all depends on how we close this hourly candle. If we close this beneath this wick, then you know where we're going down in these regions. Based off of this impulse retrace idea, it has the math inside it being proper here about it. I say take it out. Why not? It's been on the charts long enough. Why not just spawn the divergence, get us out of here? So if we do that and you see us get a wick out of here, then we could start to build a narrative for a long. You need to see that divergence play out first. So the hourly time frame needs to come down a little bit here. It all starts with lower time frames though, so you have to be aware of what's happening on the lower time frame. You are getting some 5-minute bullish divergence here on the 5-minute time frame. You got bullish divergence on the money flow here off this stab to the downside, and starting to see a play out here on the 5-minute time frame. If we look to the 15-minute reset, but acting ambiguous. Generally, this second play is what you aim for if you are looking for some sort of idea out of here for a bounce up into these liquidity pools. I don't know how what bearish news is out right now, if there is any. If there is, pay heed to that, but you could come up to these pools too. On the 1-minute time frame, there's awful amount of shorts opened here, 16 billion, to at least warrant a bounce to at least take out some of these pools. If I had to make a choice right now, I would not be shorting a double bottom. It's just not a good look for me personally. I'd rather take my chance with the long and at least see the bounce out of here. When I see that 6, I normally trust the 6s to the upside here, so I would say that it's going to at least come up to here and take out these pools that we assessed on the Asian session. We did put out the idea of the cloud thinning and all that stuff. It didn't plan out exactly as we said, but we said there would be this double bottom opportunity at some point, potentially speaking. So this could be your double bottom idea as you start to see the shorts get potentially trapped on that last drop down there. They don't make it easy for even the shorts. They try to like trap them into the ideas. So are they trying to, they're pinging more liquidity here, seeing which imbalance is here, 24.19. So there's still an imbalance in the short idea. They're trying to make sure they're not having to pay too many longs here, I guess. But yeah, that guy up there at 25.82, 25.95, like I don't see them letting these guys survive. At least they're going to come back to that 26K region using that trapped short liquidity that they had, probably come up to that region and above, at least to knock out the 50x pools up here. So I'd be surprised if they don't make it up to this region at the bare minimum, and then up to this as a frugal idea as well, and possibly beyond, who knows. You do have the 5 time frames oversold here as we went over as we made our descent. This can also be alerted to your phone using the stochastic array and dynamic alerts on Momentum Master. Well, ladies and gentlemen, I must get ready for the NASDAQ futures. I got a few accounts live that I have to attend to, so I will get in the mindset for that. But it's nice that Bitcoin made a choice to go in a direction. It's better than not going anywhere, which it has been doing for quite some time. Well, ladies and gents, thank you for stopping in, and thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. So thank you for coming on in, and we'll catch you on the flip side. Peace.